Okay, so, we've got some interesting stuff to unpack this week. Kind of a lot of nervous energy swirling around the markets.
Yeah, definitely. You look at March and the S&P 500, tanked 10%.
Mhm.
That's the worst we've seen since early 2022.
Right. And, a lot of our listeners are pointing to April 2nd, this Liberation Day thing as a potential tipping point. Like,
Right.
some are saying the market could really slump, maybe even drag the whole economy down with it.
Yeah, there's definitely a lot of chatter about that.
So what we want to do today is really dig into this, like what's driving this fear and, how can our listeners make sense of it all?
Absolutely. I think, one thing that jumps out from the material you sent is just this perfect storm of bad news.
Right.
Right. You've got this fear of a global trade war heating back up,
Right.
especially between the U.S. and, well, you know,
Yeah.
we don't need to name names, but one of its biggest trading partners. And everyone remembers what happened last time,
Mm.
right? Tariffs all over the place, supply chains getting messed up.
Totally. And then you layer on top of that inflation. It's like it just won't quit, even with everything the Fed's been doing. And then
Yeah.
economy, like people are starting to worry that growth is slowing down. It's no wonder everyone's on edge.
It's a recipe for anxiety, for sure.
Okay, so let's talk about the Fed for a second, right? Because they've been doing a lot to try and get this under control. What did your research tell you about that?
Well, yeah, it's been a wild ride, hasn't it? I
Yeah.
mean, starting back in 2022, they really hit the gas on those interest rate hikes, trying to slam the brakes on inflation. Remember, it was at like 9% at one point.
Yeah, it's nuts.
Crazy. And they did manage to get it down, to around 3%. Then they had to start cutting rates again this year to try and, avoid a full-blown recession. So it's like
Right.
they're stuck between a rock and a hard place right now.
It's a total tightrope walk, isn't it? Like,
Yeah.
if these trade tensions flare up again and inflation starts climbing again, the Fed's going to have to choose between, raising rates and risking a recession or
Yeah.
lowering rates and letting inflation run wild again.
Exactly. And the thing is, their usual playbook, raising and lowering interest rates to kind of nudge the economy in the right direction, that works a lot less well when you've got these huge global trade disruptions messing with supply and demand. It's like they're trying to steer a ship in a hurricane.
Totally. So we've talked about a lot of the scary stuff, but, one of the sources you sent me had this really interesting take. They were basically saying, hey, maybe this is just a natural correction.
Right.
The market went on this crazy run. The S&P 500 was up like 60% from 2023 to 2024. Maybe this 10% drop is just people taking profits and shifting their money to safer bets.
It's a good point. And, you often see that after periods of really rapid growth, investors kind of taking a breather, locking in some gains, moving some assets to more defensive positions, it helps prevent the market from getting too overheated, which could actually lead to a bigger crash down the road.
Right, like a bubble bursting type situation.
Exactly. And, history shows us that corrections like this are totally normal. In fact, they can be healthy for the market long term.
That makes sense. So for our listeners out there, they're hearing all this news, they're seeing these market swings. What are some concrete steps they can take right now to kind of weather the storm? What did the experts recommend?
Well, the advice is pretty consistent across the board. First of all, tackle that high interest debt, like credit card balances, that kind of thing, especially when things are uncertain. Getting that monkey off your back is always a good move.
Right.
Second, that emergency fund, that 6 to 18 months of living expenses saved up, that can make a huge difference when it comes to peace of mind.
It's like your financial safety net.
Exactly. And this might sound counterintuitive, but some experts are actually saying, hey, this dip could be a buying opportunity.
Interesting.
If you've got cash on hand and you're in it for the long haul, this can be a chance to scoop up some great companies at a discount.
So like a fire sale, kind of?
In a way, yeah.
Yeah.
But you got to be smart about it. Do your research.
Right, of course. Okay, so speaking of specific companies, one that popped up in your research was NVIDIA. What can you tell us about them?
Yeah, they're definitely one to watch right now. They're all about building the infrastructure that powers AI, and that's a sector that's just exploding right now.
AI is so hot right now.
It really is. And a lot of analysts are saying NVIDIA is in a great position to capitalize on that growth. And, their valuation, it's not crazy. It's sitting around 26 times expected earnings, which for a company in a high-growth sector like that is actually pretty reasonable.
And what about their stock price? What's the outlook there?
Well, some projections are showing some pretty huge potential gains over the next 5 years. We're talking estimates that range from like $294 to $593 a share.
Wow.
So, Obviously, those are just estimates, but it gives you a sense of the optimism surrounding the company.
Definitely. So to kind of zoom out again and look at the big picture, one thing that a lot of your sources emphasized was this idea that markets tend to overreact. They freak out in the short term, but long term, things usually even out.
It's so true. It's like they have a built-in panic button.
Hmm.
They always assume the worst-case scenario is about to happen, but history tells us that corrections are a natural part of the cycle, and they're usually followed by a recovery.
So basically, don't panic.
Exactly.
Okay, so if we could distill all this down to one key takeaway for our listeners, what would it be?
I think it's stay informed, stay calm, and stick to your long-term plan.
Yeah.
Understand the forces at play, don't get spooked by short-term volatility, and remember that market corrections are normal.
Love it. Great advice. So on that note, we've been talking a lot about AI and how it's driving so much excitement in the market, but it makes you wonder what else is out there, right? Like what other game-changing sectors or technologies are flying under the radar right now that could offer huge growth potential down the road?
That's a great question.
Something to think about, right?
Definitely food for thought.
Awesome. Well, hey, thanks for joining me for this deep dive. It's been a really illuminating conversation.
My pleasure. Thanks for having me.
Danny.